Welcome to another deep dive with us. This time, we're looking at a really interesting investment opportunity. One that's not just about making money, but also about making a difference.
Oh, absolutely.
Yeah. We're digging into Sandton Property Capital's investment proposal, and their focus is on a rent-to-buy property model in South Africa. And
Okay.
what's really caught our eye is their claim that it can help people become homeowners
Hmm.
and potentially generate over 300% returns for investors over 15 years.
Yeah, that's quite a bold statement. It definitely piques my interest too. What I find particularly interesting about their proposal is how it addresses a specific need in the South African market
Right.
while also presenting a potentially lucrative opportunity for
Yeah,
investors.
let's break this down a little bit. So who is Sandton Property Capital,
Sure.
and what are they actually proposing?
Well, Sandton Property Capital is aiming to kind of reshape the South African housing market, really. They're addressing the huge gap between property prices and what most people can actually afford. Their rent-to-buy model is designed to bridge that gap. They're purchasing properties, often below market value, which helps minimize the initial investment and risk for
So
investors.
they're finding properties that are a good deal, essentially.
Exactly. And then they work with clients who dream of owning a home, but maybe they can't get a traditional mortgage. These clients enter into a structured rental agreement with Sandton Property Capital. It can last up to 15 years.
Got it. So I'm guessing these monthly rental payments are structured to eventually lead to the client owning the property. Is that right?
You got it. Those payments are similar to what you'd see with a mortgage.
Okay.
But the big difference is that at the end of that agreement, the client becomes the full owner.
It's a really interesting concept. Seems like a win-win for the client and the investor.
Yeah.
But as with every investment, there are risks. What happens if a client can't keep up with their payments?
Well, Sandton Property Capital has implemented some really smart risk mitigation strategies. First, they require clients to make a 10% deposit upfront. That acts as a safety net if a client defaults.
So the client has skin in the game.
Yeah,
That definitely incentivizes them to stick with the agreement.
precisely. And even if a client defaults, Sandton Property Capital has a couple of options.
Okay.
They can either resell the property at market value, and remember, they bought it below market initially,
Right.
or they can find another qualified client to take over that rent-to-buy agreement.
Oh,
They've also smartly partnered with real estate agencies and bond originators, those
mhm.
companies that help people get mortgages in South Africa.
Right.
This ensures they have a steady stream of potential clients coming in.
So they have a good system to protect investors.
Yeah.
But let's talk returns.
Yeah.
They are claiming over 300% in 15 years.
Right?
It's a big number.
How do they get there?
Let's look at an example from their proposal.
They highlight a property bought for R800,000, roughly 20% below its estimated market value. Assuming a 5% yearly appreciation rate, the property should be worth R1,600,000 after 15 years.
So the property doubles in value,
Yeah,
but that's only appreciation, right? What about the rental income?
absolutely. You're right, appreciation is just one part of it. In this example, they also factor in a monthly rental income of R9,500.
Okay.
That adds up over 15 years. When you combine appreciation and rental income, you're looking at a potential return of over R2,510,000.
Wow, that's a hefty return. How does that compare to like a traditional savings account?
Well, they actually make that comparison in their proposal.
Okay.
If you put that same R800,000 into a high-yield savings account at a 5% interest rate, after 15 years, you'd have about R1,800,000.
Right.
A decent return, but much less than what they're projecting with this model.
And we can't forget about inflation eating away at the value of your savings. Real estate often acts as a hedge against that.
Exactly. So you're looking at a potentially much higher return, and you're protecting your investment from inflation.
This is starting to sound pretty good. But before we get too excited, let's dig deeper into how this actually works.
Okay.
How involved do investors need to be in managing these properties?
That's a great question, and it's one of the key selling points here. Sandton Property Capital really emphasizes a hands-off experience for investors. They have a very experienced management team who handles everything. Property acquisition, tenant vetting, rent collection, property maintenance, they do it all.
So passive income for investors. They can sit back and watch their investment grow without dealing with being a landlord.
Exactly. They even guarantee 100% occupancy during the entire investment period, which shows how confident they are in managing these properties effectively. They also provide detailed financial reports, ensuring complete transparency.
So they have the experience, the systems, and the transparency. But who are the people behind Sandton Property Capital? What's their track record?
Well, according to their proposal, they have a really deep understanding of the South African property market and a proven track record of success in property management. Seems like they've done their research and they're well positioned to navigate this market.
This is all painting a pretty compelling picture. But let's be honest, every investment has some level of risk. What are the potential downsides here, and how does Sandton Property Capital address those concerns?
That's a really important question. It's something any smart investor would consider. So let's dive into those potential risks and see how they stack up against Sandton Property Capital's strategies.
So we've talked about all the potential upsides, but what about the risks? What are some things that could go wrong with this investment?
Well, one risk is a downturn in the South African property market. If values were to drop significantly, that could definitely impact the returns investors see.
That's a valid concern. But doesn't Sandton Property Capital acquire properties below market value anyway? Wouldn't that protect against a downturn to some degree?
Yeah, you're right. That's one of their risk mitigation strategies. By buying properties below market value, they create that margin of safety. So even if the market dips, it's more likely they can still sell the property at a price that protects the investor's capital.
Okay, that makes sense. What other risks should investors be aware of?
Another one is tenant default.
Right.
If a client can't keep up with their monthly payments, it could disrupt the income stream for investors.
But didn't we talk about the 10% deposit
Right.
and their ability to resell or resign the property?
Exactly.
Mhm.
Those safeguards are there to minimize the impact of tenant default.
Okay.
That 10% deposit acts as a financial cushion, and their partnerships with real estate agencies help them quickly find new tenants or buyers if needed.
So they've got a plan B and a plan C if things don't go as planned. It sounds like they've thought this through. But let's zoom out a little bit and talk about South Africa as an investment destination. What's the overall investment climate like?
South Africa is an interesting market for sure. It's the most industrialized economy in Africa, and it offers a lot to investors. A growing middle class, a strong financial sector, and a well-developed legal framework.
But South Africa has faced some economic and political challenges, right?
Yeah, there have been some challenges, as with any emerging market, really.
Yeah.
But it's also a country with a lot of resilience and potential. The government is working to address those challenges and make it a more attractive place for investment.
So there's a sense of optimism about the future.
I'd say so, yeah. And for investors willing to take a bit of risk, South Africa offers some very compelling opportunities.
And it sounds like Sandton Property Capital is banking on that optimism. Their whole model is built around the idea that South Africa's property market will continue to grow over the long term.
Right. And they're not just passively waiting for that growth, they're actually helping to drive it.
Okay.
That rent-to-buy model helps more people enter the property market, and that supports economic growth and strengthens communities.
Yeah, like a virtuous cycle. But let's be real. Investing in an emerging market like South Africa isn't for everyone. What advice would you give to investors considering this market?
I think the key is to do your homework, really understand the market,
Right.
and get advice from experts who specialize in South African investments.
And would it be wise to start with a smaller investment just to test it out?
Absolutely. Don't put all your eggs in one basket. Diversify your portfolio. You can always increase your exposure as you gain more confidence in the market.
So it's all about calculated risks and a long-term perspective.
Right.
Now let's talk about the social impact. They're not just promising financial returns. They're also saying they want to help people achieve homeownership. How does that part of their proposal work in reality?
That's what's so interesting about this opportunity. They're tackling a very real problem in South Africa. Many people simply can't afford to buy a home the traditional way. Banks have really strict lending criteria, and property prices are often just out of reach.
So this rent-to-buy model is a different way to achieve homeownership.
Exactly. It gives people who might not qualify for a mortgage a chance to build equity
Okay.
and eventually own their own home. It benefits the individuals involved, of course, but it also has these positive ripple effects throughout the community.
What kind of ripple effects?
Well, homeownership is often seen as a foundation for financial stability
Right.
and social mobility.
Yeah.
It can empower families, strengthen communities, and contribute to a more equitable society.
So it's more than just bricks and mortar. It's about investing in people and communities.
Absolutely.
But let's get back to the investors. We've covered potential rewards and social impact.
Right.
But what about the practicalities of investing with Sandton Property Capital? What's that process like?
They've outlined their process very clearly in their proposal.
Okay.
And they stress that it's meant to be straightforward and transparent. Investors can choose to invest in a single property or in a diversified portfolio.
Okay, so there's flexibility based on an investor's preference
Exactly.
and risk appetite.
Yeah.
But what about communication? Oh, yeah.
How do investors stay informed about how their investments are doing?
They provide regular updates and detailed financial reports.
Okay.
So investors always have a clear picture of how their money is being managed and what returns they can expect.
So they've got transparency and communication covered. But what about the management team? Who are these people?
Well, we touched on that earlier. They have a team with a lot of experience in the South African property market, and they seem to have a real passion for making a positive impact.
It sounds like they're not just talking the talk, but walking the walk, combining financial success with social responsibility.
Exactly.
But let's get back to how they operate. How do they find these properties and tenants?
They have a multi-pronged approach.
Okay.
They use market research to find undervalued properties that have good potential for appreciation. They also work with real estate agents to find properties that meet their criteria. And for finding tenants, they leverage their partnerships with bond originators, giving them access to a pool of pre-qualified clients. So they're combining data analysis with good old-fashioned networking. Sounds like a solid system.
It is, and it's designed to minimize risk and maximize returns for investors. But we have to remember, this is still an investment, and all investments carry some uncertainty.
That's a great point. It doesn't matter how well-structured an investment is, there are always those external factors that can affect its performance.
Absolutely. And that's why it's so important for investors to do their own research, carefully consider those risks, and make decisions that align with their financial goals and risk tolerance.
That's what we aim to do here on The Deep Dive. Give listeners the information and insights they need to make smart investment decisions.
Right.
Now, before we wrap up, let's consider the bigger picture. What are the long-term implications of this rent-to-buy model? Could it actually change the South African housing market? So we've been talking about how this model could really make a difference in South Africa, but could this be something that we see elsewhere too? I mean, the issue of affordable housing, it isn't limited to South Africa, right?
Yeah, definitely not. A lot of people around the world are having trouble entering the property market.
Right.
So that traditional model of homeownership is getting harder and harder for many people to achieve. So a model like this one that offers a different way to own a home could have a much broader impact.
It's like a whole new way of thinking about homeownership.
Yeah.
But for that to happen, this model has to prove itself right.
Oh, yeah, for sure.
Investors need to see that it actually works not just in theory, but in reality.
Absolutely. Sandton Property Capital has to show that they can deliver what they promise,
Right.
both the financial returns and the social impact. If they can do that, this could be a big deal not only for South Africa, but for the global housing market as a whole.
It's a big vision, and it's really exciting to think about what could happen. But let's be practical for a second. If someone is listening to this and thinking, this is something I want to be a part of, what should they do? What's the next step?
Well, the first step is to learn more. Sandton Property Capital has a really detailed proposal. It lays out their model, their projections, and how they plan to manage risks. I definitely encourage anyone who's interested to check it out.
And what other due diligence should potential investors do besides reading the proposal?
It's always a good idea to talk to financial advisors who are experienced in international investments, especially in emerging markets like South Africa.
Right.
They can help you figure out the best approach based on your own financial goals and how much risk you're comfortable with.
So do your research, get expert advice, and then make an educated decision.
Exactly.
That sounds like a smart approach to me.
Yeah. And it's important to remember investing is a personal thing.
Right.
There's no one right way to do it. What works for one person may not work for another.
Absolutely. We're not here to tell people what to do with their money. We just want to give them the information and insights they need to make the best choices for themselves.
That's right. We're here to spark some curiosity, encourage some critical thinking, and maybe even inspire people to take action.
Well, I think we've done that today.
Yeah.
We've taken a deep dive into a very unique investment opportunity, one that combines financial returns with positive social impact. We looked at the model, the market, compared the deep, the potential risks and rewards, and hopefully we've given our listeners something to think about.
It's been great joining you on this.
And thank you for listening to The Deep Dive. We'll be back soon with another fascinating look at an investment opportunity that's making a difference in the world. Until then, keep learning, keep exploring, and keep investing in a better future.